FM. Naked eyes are there. Good morning. It's 8:40 here, 20 now before 9. It's unemployment day on the government data dump, which means we get to find out just how the economy's doing. And this is one weird picture of it for checking in on our markets this morning. Let's check in with Phillip Statler from Statler Financial Services and see what his take on things are. Phillip, good morning. It's good to hear your voice today.
Hey, good morning. Hey, welcome to the first Friday and the end of the first week of 2022. Let's see what the markets can do for us as we head into the weekend. I'm a little blinded today, Dave. I had a little technical issues, and like I was telling you beforehand, I don't have all my tip sheets available, but I at least do have the futures when we get done.
Perfect. Between the two of us, we didn't do too badly. Then I think we got all the applicable data that matters most. Setting the table, yesterday we continued our swoon, for lack of a better term, over the Federal Reserve notes and the indication that we had the other day that, the Fed's deadly serious about creaming that loose money policy and getting inflation under control. This time the Dow was the big loser of the bunch. It was down 170 points, almost a full 0.5%. Standard & Poor's was off by 4.5%. And NASDAQ leveled off a little bit. It was only down 19 1/3 yesterday, but it was all red ink. And that brings us up to this morning. And the first Friday of the month is always when we get the unemployment number. We'll start out with the good news because that's going to be the top of the hour news all morning that you're going to be hearing about. Last month we were at 4.1% unemployment. We're down to 3.9% unemployment rate in this country, which, if I wasn't looking at the rest of the numbers, I'd be saying, yippee, happy days are here again, right?
Oh, that's right. That's obviously below full employment. But, you and I both talk about how there's those people that have just gone out of the workforce, and that's what's hurting us. That's what's hurting small businesses, and that's what's helping this number look so good.
Absolutely. It's a Trumpian number as far as the unemployment rate itself is concerned. Then we get to the jobs created numbers, and my bull crud detector is going off again. We were expecting an increase of 447,000 jobs. Your tip sheet said 442,000 jobs. According to the federal government in the last month, we only added 199,000 jobs. Now, that would sound like an Armageddon time miss, but in the same report, the government also revised both October and November. They said, whoops, we added another 102,000 jobs in October than we thought we did, another 39,000 jobs in November than we think we did. So you put it all together, and the 3-month total, just putting them into different months, is still a miss, but not quite as bad as we were expected. But both of those kind of go up against the ADP number that we had that was a big pleasant surprise earlier in the week, and a decrease in the unemployment rate. And I kind of look at that, and like I said, Phillip, my bull crud detector is going off kind of loud. How about yours?
Yeah, the reallocation of those numbers, I mean, those are some pretty big adjustments that they've had to make, and you got to wonder what the issues are there. But hey, the number that they have, will it get revised next month? I mean, that's the thing. You start to rely on some of these numbers, and we get changes back a couple months, and you wonder where are these guys working? I guess they had a lot of holidays between Christmas and Thanksgiving. I guess maybe they just missed some stuff.
Yeah, no idea whatsoever how we came out to it, but the mathematics of the situation is when we go from month to month, and they show only in this month 199,000 new jobs, but we still managed to go down 0.3% on the unemployment rate. Like I said, my bull crud detector is off in loud volumes. The average hourly earnings, by the way, the average American worker got a 0.6% raise, 19 cents an hour. The average increase in our wage, 0.6% is not bad on a single month basis. So that I'll consider relatively good news.
Yeah, it is. We're continue to see wage inflation, which when we hit full employment, that's what happens because workers are in short supply. Businesses need them. They're willing to pay more to get them. And that then in general will push wages up more and more. And then you and I, we get the benefit of paying for that.
Good news. Every bit of good news has a bit of bad news to go along with it. But yeah, the point is they're having trouble finding people to go to work. So entry-level jobs that one would expect to be offering the minimum wage and now paying well above minimum wage, and that's reflected in the fact that our average pay is going up. Speaking of average works, the average work week stayed steady at about 34.7 hours per week. So the people that are working are getting pretty close to full-time work, and that will consider a relatively good bit of news, although, as you keep saying, we got so many people that have just dropped out of the workforce completely. You start looking at all of these employment numbers and go, this all in all does not make a whole lot of sense, does it?
No, it really doesn't. And you know, the year has finished up. I mean, I think if we look at 2021, it's finished up in relatively good shape, other than inflation. Um, you know, the markets have done okay. The average worker has done better. It's just that the supply chain still needs to get fixed, and we still got to get inflation under control. Other than that, you look at 2021, it looked pretty good from a financial standpoint.
Yeah, from a financial standpoint, just on the indexes, it was reason to celebrate. I did notice that after the unemployment numbers came out, the response was we sold a few Treasury bills because the 10-year yield is up 7/7 already. 7/10 of a basis point. It's up past 1.7% again this morning, and that's an interest number that we're not necessarily happy to see because the Fed hasn't even raised the reference rate yet.
You're right. I mean, that's up to one. Well, I've got it up at a 1.75%, and I haven't had a chance to pull the chart to see, but I'm thinking that we're pretty much in terms of the last year, one of the higher numbers we've seen.
I suspect so. Janet Yellen, when she was in charge of the Fed, used to call this the process of quote unquote normalizing interest rates. I'm sorry, but normal I don't necessarily look forward to, given what it's going to do to the federal budget.
Well, that's true. It's going to really, it's going to hurt as that rate keeps going up. And it wasn't that long ago that you go back 3 years or so, 4 years, and that was at 2.5, 2.75%, and that's a big number.
Absolutely. But a few years ago, we didn't have the budget deficit we got now either in terms of total dollars, do we?
That's true, too.
Absolutely. In terms of company earnings, the earnings season is not starting yet. Are there any early indications we got from some companies that are telling us good news, bad news, or indifferent?
I had a couple. I had them pulled up, but with the system I'm using right now, I'm having to jump between different things. We had some stuff. T-Mobile was probably one of the ones that actually came out and said, hey, we had better user numbers and we picked up more subscribers than we anticipated. So that was some good news from them, and that was helping their stock a little bit early on, and then it kind of flipped the other direction, I believe. So they're hurting.
I saw the top line to T-Mobile on the news ticker this morning, and they showed a gain and said the investors wanted more. So I think there's a negative impact going on them right now. I think investors, buying Sprint was expected to be a money machine for them.
I don't see how they thought that was going to happen, but I really don't have much else. I mean, there's a few upgrades and downgrades, but nothing really out of the ordinary right now.
Understood. I suspect we're probably going to start seeing the financials coming the early to middle part of next week. Am I guessing right on that?
Actually, I think if I remember right, it's Friday.
Okay. Well, that's when we really get.
Week from today is the banks will start reporting.
All right, that's when we really get our bellwether as earnings season, and then the flood begins. Resetting the table this morning, it was an off day on Wall Street yesterday, but just for a change, it wasn't a catastrophic loss like the day before. Just down by 0.5% type numbers in the worst case on the Dow. 45 minutes before we start this morning, Phillip, what are your futures showing? Are we looking okay?
Yeah, we got a lot of red ink right now, Dave. I mean, it's not a lot of big red ink, but it's still red ink, right? We got the Dow down about 0.1%. The S&P 500 is down between 0.1 and 0.2%, and the Nasdaq 100 is down almost 0.5%. On the commodities side, we've got gold and silver both going up, not by a lot, but both of them by about 0.1%. And then crude oil is let's see if I can find the right crude oil, Dave. Here we go. It is not good news. It's up 0.9%, up over 80 to $80.20 a barrel right now.
Are you sure that's the right crude oil? I'd like you to find
I'm
something
sure
cheaper.
because the other one says it's $82.72 a barrel. I picked the cheapest of the two.
I like yours better, man. Looking at the world markets, it was a mixed bag in Asia. Everything was on the red side, except for Hong Kong. I'm not 100% sure, but they had a very, very good day. They closed 1.7% up this morning. European markets are pretty much on the negative side. British markets, the only ones showing any green ink, and they're basically 1/100th of a percent above the zero line this morning. Everybody else is looking at us and going, gosh, I wish they get their act together. By and large, red ink across Europe this morning. Phillip, getting a hold of you is kind of a ticket to stability on one's retirement funds. How do I find you in order to get the risk out of my portfolio where I don't know it is?
Devin, give us a call at 863-382-0037. Check out our website at statlerfinancial.com. They can follow us on Facebook at Statler Financial Services. We'll pop right up, like and follow us there. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and on 95.3 FM.
And back here again Monday morning on Light FM. Phillip, thank you so much. You have a marvelous weekend. We'll see you then, all right?
All right, man. You too.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want to thank you for joining us. A little technical difficulty today, but we muddled through. And I hope you guys have a great weekend and that your year's off to a great start. We'll talk to you again on Tuesday.